Now we know the runners in the race for the White House. Republican candidate Mitt Romney picks Paul Ryan, a fiscal hawk, Tea Party darling and a harsh critic of the Fed, as his right-hand man. So what would a Republican victory in November do for the dollar? This is today's Market Pulse, and with me is Reuters FX analyst Neil Kimberley. Neil, the dollar's pretty flat today, slightly on the weaker side, and there's obviously a long way to go until November, but you think a Romney-Ryan ticket would be, on the margins, positive for the US dollar?
Yeah, I'm casting my mind back to 1984, Jamie, when Reagan and Bush got re-elected for the second time. Morning in America, I think, was the election slogan. And after they come back in, you had a clear view. Small government was going to get a second term. Mr. Reagan did what Mr. Reagan did, and within 12 months we had to have Plaza Accords to try and drive the dollar down. I'm just wondering whether the fact that we now know that we have this small government stance from the Republicans against the bigger government stance of President Obama gives the American people a clear choice. Now, in the period between now and the election, it's obviously going to be maximum political risk. You're not going to have too many eggs in the dollar's basket. But if he gets a clear mandate, you may find that US equities start to move up and people in America get that self-confidence back, that self-belief, and that US economy reinvents itself as it's done so many times before.
But still deep in this financial crisis, the biggest, as we know, since the 30s, is small government good for a country's economy and, by extension, its currency?
It depends on your way of putting it. Obviously, Barack Obama would say that he's on the right path here. But clearly, given what's been happening in the congressional elections in the last couple of years, with the rise of the Tea Party exemplified by Mr. Ryan, many people in the States would disagree with what's been happening. Now, you pays your money and you takes your choice. If this hasn't worked for the last 4 years, maybe Americans will think, well, we try a different path, and they'll give it the benefit of the doubt for the first couple of years. You don't know. That's why I'm saying you hedge your bets into the election. But if he gets a clear mandate, particularly also if he gets control of Congress, the Senate, you could well see the dollar rally from that point, I think, from November.
Where does the Fed fit into this? Because Ryan, as we know, is a harsh critic of the Fed. He's railed against its alleged debasement of the dollar. Where would the Fed fit into this?
Mr. Ryan, for me, brings the Tea Party votes to Mr. Romney in November. After that point, if Mr. Romney is successful, he is the man in the Oval Office, not Mr. Ryan. And if you look at what Mr. Romney said about the Federal Reserve, and you look at the nature of his economics team, of course, Mr. Bernanke may not be the head of the Fed for much longer after that, but you wouldn't expect, well, I wouldn't expect to see Mr. Romney adopting the Ryan style or the Ron Paul style of anti-Fed dogma. I think you'd see more of the same, and people would be parachuted into the Fed who would basically have the same outlook as Mr. Bernanke, and I don't think the Fed's independence would be touched.
OK, staying with politicians and politics, but close to home here in the Eurozone, a lot of rhetoric coming out of Germany over the weekend, yet the Euro's up today.
Well, the rhetoric first, obviously, it looks to me as if the 2013 German federal election has begun. Miss Merkel's hiking holiday is over. She's back in the office today. Mr. Fuchs, a senior member of the CDU, was talking tough about Greece over the weekend, saying, look, no backsliding. Even if the glass is half full, we can veto it. So he's really putting the pressure on the Greeks. And then Mr. Steinbrück, SPD, former finance minister, but now obviously on the opposition side, saying he could back common debt issuance within the Eurozone. The very fact that the SPD can back it tells me that Merkel's coalition has to be even stronger against it. So you have this local dynamic, internal politics in Germany coming up, bubbling up. I think it weighs on the euro because I think there's a danger that the euro becomes collateral damage in the local political maelstrom that is the German 2013 federal election. On the day, there's very little going through in terms of volumes. We've ticked up. There were a lot of offers around the 123.0510, the 21 period and 100 period moving averages on the 3-hour chart. Stops taken out just above there. Then the 200-hour moving average at 123.20. Stops taken out above there. As we're coming on air, it's around 123.35. I'm hearing a lot of sellers 123.40 to 50. And more importantly, from my perspective, when I talked to Asia this morning, a lot of investors over there telling me, oh yes, let Europe push it up a little bit. We do have an interest to fade into a short euro position, 123.5 to 124.
So Asia's selling at higher levels. Just to finish up, you don't like the euro much. As we've discussed, potential problems are with the dollar. Fiat currencies in general looking a bit shaky. Should we be looking at something like oil, even if it's already in bull market territory?
I quite like it. I mean, it's already moved a long way, but you can see the reasons why. We're in the middle of the US driving season. You know, it's very hot out there. Obviously, the air cons are on full blast in Japan, and they don't have the nuclear energy, so they're sucking in oil left, right, and centre. But on top of that, you've got one other factor. You've got the soft price. We had a drought in the States, the Midwest, it's the worst corn crop for something like 50 years. But 40% of the US corn crop has to be diverted for ethanol production. Now, the pressure is now on Barack Obama to take away that insistence. Once you reduce the ethanol production, you increase the need for more oil. So by extension, the fact that the corn price is through the roof could, if Barack Obama reacts the way he's being pressured to, give further support to oil. And on top of that, you've still got the Iran situation, rhetoric rising in the Middle East. And the last time the grain prices were this high, it began the process that led to the Arab Spring. I can understand why oil traders were playing off alongside.
And we just saw a chart there, oil, Brent, 114.5. That's the highest in 3 months, up 1.5% today. Neil, thank you very much. My thanks there to Reuters' Neil Kimberley. Do watch us at this time every weekday for Market Pulse, a look at what's moving on financial markets and why. I'm Jamie McGeever. This is Reuters.